I've called this trading system trading the gap, and the idea is to buy stocks that have opened 1% or more below the previous day's low. In other words, these stocks have gapped lower on the open. A gap can be a bearish signal, but it can also occur from an overreaction. This means that the selling might be overdone and that buyers might then step in to bring these stocks back up. So this is classed as a classic mean reversion reversal system. We're going to be testing this system on daily time frames. Our starting capital will be set at $10,000 and our position size will be 20% with a maximum of one open position per day. Like before, we're going to set commissions at 1 cent per share to simulate trading costs and slippage. So as mentioned, we're going to buy a stock on the open whenever it opens 1% or more below the previous day's low, and we're going to then exit the trade on the close. We're allowed to hold one stock at a time, and if we happen to get more than one trading signal, we're going to prefer the stock with the highest RSI 14 value on the previous day. So in other words, we want to find stocks that have gapped down from a previously fairly overbought condition. This is quite important because it seems that the stocks that were previously trending higher do make the best trades when they gap down. Here's an example of a profitable setup in Oracle. You can see that the stock has opened on a significant gap down, so we've bought right on the open and then we've exited the trade right on the close for a quick profit of around 1.3%. So these are actually pretty simple trading rules which I've coded into AmiBroker, and I'll now test the system on the S&P 1500 universe of stocks between 2000 and 2015. So as you can see, running the system gave us an annualized return of 26.14% with a maximum drawdown of around 20% and a win rate of 59%. So these are pretty strong results. If we now run the system on the second data period between 2015 and April 2016, you can see that we get an annualized return of 2.38% with a drawdown of 19.22%. So you can see that we got a good result in sample, but the system has not done so well in the out of sample. However, I wouldn't give up on this system just yet. The system trades only one stock at a time at the moment, and I found that with a larger portfolio and some slight variations, you can get some very good results. Changing the position size and changing the ranking mechanism might lead to good things as well. So I recommend experimenting with various settings and filters. One issue with this system, however, is that it assumes you're able to calculate the gap as well as the previous RSI values for ranking and then enter the trades on the open without any slippage. In reality, this would obviously be quite hard to do without an automated process, especially if the portfolio size is more than one position. I think one option here would be to look into the pre-market and see if you can get a head start by identifying any stocks that are already moving lower and therefore have the potential to open sharply lower. Nevertheless, I do think there is potential in this strategy, particularly with a few tweaks and maybe a couple of common sense filters. It would also be wise to run the strategy with different starting capital, different price, volume requirements and commissions, etc. All in all, I think this is a good strategy that does have potential to do well. I'll now run through the recorded back tests and include some of the charts and statistics in AmiBroker so you can get a better idea for this system.